So I'm going to call this one taxation update for you. Taxation update for the new tax year. So taxation update for 2020, 2021. Sounds very modern, doesn't it? And up to date. And that's what I want to take a look at with you. Now, as you can appreciate, those of you that are studying for your exams or are just keeping up to date with your CPD, you appreciate that the examining boards change their syllabus once a year. The CII are changing theirs on the 1st of September, so if you're doing the CF1 or CF6 RO1s, you get your new syllabus on the 1st of September, which means you'll be tested on the new tax year. And the new tax year, as I've written up there, is 2021. This started in April 2020, which is a few months ago, of course, and will finish next year. For those of you on the LIBF, they still haven't got around to changing their syllabus or giving any indication when they are. So you're still working on 2019, 2020 tax year. Now, the good news is, this is the good news, the tax changes are negligible this year, which is brilliant. Now, income tax, let's take a look at some of these tax changes, shall we, first of all. Income tax for the new tax year is pretty much the same as it was last tax year. So that's smiley faces all round. Now, this means, of course, that there's no changes in tax rates. There's no changes in personal allowance rates. There's no changes in the high rate bands and all those good things, which is fantastic if you've just learnt, if you like, the previous stuff. You get your tax sheet anyway in the exams, so you don't need to worry about learning them. Scottish rates have changed slightly. I think the bands have changed slightly, so you'll need to check those up if you're working north of the border. They like to do things slightly differently, different tax rates, and this is the way it works. And I totally get that. But in the exam, you'll be doing English and Welsh tax rate calculations and things like that, so you need to be aware of that one. The only slight change in income tax is the married couples allowance. Now, the married couples allowance, don't worry too much about it. This is for people born before 1935. So even my old dad doesn't even count for that. He was born in 1938. So these are people in their mid to late 80s. Still get a very small married couples allowance, which is quite useful, really, isn't it, if you think about it? Now, the rates there have changed slightly, so you need to check the tax sheets for that. So that's the first sort of major difference, if you like, but not a lot of change, which is great. So things that have changed for you. First of all, pension contributions. Let's put that in there for you, pensions. Now, pension contributions have a lot of tax information, a lot of numbers, and we've had one major change there. Everything remains the same, really. The annual allowance remains at £40,000, but the change that has occurred is the lifetime allowance. Now, the lifetime allowance, there you go, the lifetime allowance is, broadly speaking, the most you're allowed to put into your pension pot in any lifetime, effectively, hence it's called your lifetime allowance. That's gone up by the CPI, I think it is. It's now £1,073,000. There you go. And £100. There you go. I had to look that one up, didn't I? That goes up each year by CPI. Hence, that's gone up. But again, it's in the tax sheet, so you don't need to worry about remembering that. But broadly speaking, if you have a pension pot more than that, you'll end up paying tax. More tax than you plan to pay, so you don't want to do that, really. But most of us mere mortals wouldn't have anywhere near this sort of pension pot, would we, when it comes to it as well. Capital gains tax, CGT, let's squeeze that one over here, shall we? You can see the capital gains tax. The change there is the annual exemption has gone up, does every year. That's now £12,300, which I looked at this morning. That's the annual exemption. That means that once you've worked out all the capital gain, taken off all your deductions and things, all your allowances, you then got an annual exemption per person of £12,300, and that reduces your capital gains tax, which is pretty good news all round, isn't it? Inheritance tax is the same, so no changes on inheritance tax. That's all good news. Numbers there haven't changed at all. The main residence band, the new one that's come out, that's been solidified at 175 per person now, so no changes there whatsoever. Small change in ISAs. Let's put this one in red, shall we, so we can see this one differently. Small change in ISAs, individual savings accounts, of course, which allow you to invest money pretty much tax-free, which is pretty good all round, really, isn't it? Now, the limits here haven't changed. It's still 20 grand per ISA per person. and that's for all the different types of ISAs, except for GISAs. Now the GISA, or the junior ISA, the limit there has gone up to a handsome £9,000, which is rather nice, isn't it? 9 grand. So if you've got little Bertie and you want to invest some money for little Bertie, you can put up to 9 grand a year in that, which is pretty good. Child trust funds, the CTFs that were phased out in 2011, I think they were. If you've still got one, which is quite unusual if you do, then they also have a limit of £9,000. So that's just a small thing, isn't it? Corporation tax is the same. Rates have changed. They're the same there. VAT, the threshold's gone up, but the figures are still the same. National insurance still the same. The only other change you may come across in your studies is pensions credit. Now, pensions credit is the top up to your state pension. You know what it's like. So your only income you've got is a state pension. There's a lot of people in that situation, actually. The only income you've got is your state pension, and you don't get the full amount because you've not paid in for all your life. Then you get pensions credit, which tops up your income to a specified figure. And if you're alone, it tops it up to £173.75. If you're a couple, it tops it up to, let's just squeeze that one in the bottom there for you, to £265, there you go, and 20 pence. But these are all on the tax sheet, you don't need to remember that. But what basically happens there is that they top your income up to that figure. But it also opens up the floodgates to everything else, like your council tax reduction as well. So those of you in the equity release later life marketplace, you need to be aware of pensions credit and the impact it has as well. So broadly speaking then, not a lot of changes, which is fantastic, don't you think? So not a lot of things to think about. Syllabus themselves have hardly changed at all. So don't get too worried about a new tax year coming in or a new syllabus that's going to test you, because if you've got an old book, you're probably okay with that anyway, so I won't worry too much about it. So that's good news for those people that are doing their exams very shortly, isn't it? As soon as the LIBF decide to change their syllabus, we'll do the same with our materials and things, but again, not a lot of changes, which is good. We'll keep you posted in these live streams. I hope that's been useful.